Hello, everyone. I hope you're doing well. Welcome back to the channel. Today, we are actually going to be answering a um, viewer's question. And the question is, hey there, thank you so much for your helpful videos. I was wondering if you could make a video on what aspects to consider when selecting a policy. Importantly, can I buy a policy directly from the issuer, just like direct mutual funds? Thanks again. So, first of all, I'm going to kind of do my little old spiel in that I am not a financial advisor. I'm not a financial planner. I'm not a life insurance agent. I am not licensed. I am just an IBC infinite banking enthusiast that really likes talking about the topic. And as you can see on the screen, I have outlined three main considerations that I think you should consider when selecting a policy. But we'll get the easiest question right out of the way first, and that is, can I buy a policy directly from the issuer? So I am not aware of any insurance company that offers a whole life insurance policy that works in a manner that works for infinite banking. So as far as I am aware, the answer to that question would be no. You do need to go through a life insurance agent. Now that's not necessarily a bad thing because of essentially uh, well, IBC is complicating, and we'll kind of get into that. And typically speaking, the person that is going to sell you an infinite banking whole life insurance policy is going to be an IBC practitioner, or at the very least, they should be, especially if you're not as familiar with the process as you would otherwise be. Give me a second here. Noticed a little typo. Alrighty, so let's get right into the questions. So there's a kind of three main considerations. Now, I don't want to claim that this is the end all be all. And like I mentioned before, I'm not an insurance agent. I'm not licensed. I don't claim to know everything. And over the past few videos, we've had a few practitioners in the comment section. So if you are a practitioner and you see something that's wrong here, misleading, have more to add, to clarify, stick it below in the comments. We can cover it in future videos. And let people know that you're a practitioner, because we've started to get people inquiring uh, kind of who to work with, right? And the more you share your knowledge, the more trust you're going to garner in the industry among consumers. So, the first of the three things that I think you should really consider when selecting a policy is, do you actually understand the infinite banking process? Now, this really doesn't have anything to do with selecting an actual policy itself, but it's more about understanding the infinite banking process as a whole. And so, for those that aren't familiar, check out other videos, of course. But the idea behind the infinite banking policy is you generate an income, which you then funnel into an IBC whole life policy. Which you then use and leverage via policy loans, and then ultimately you go and either generate investments with this, spend it, and ideally you want to create an investment. And the idea is you use potentially some of your leftover income and or the profit generated from these investments to create this perpetual system of constantly using your money that was stored here, all while your money here is compounding as if it wasn't touched, yet you are still using it all. So it essentially allows for your cash to earn money despite the fact that you are using it, unlike a traditional bank account where you would have your income, it would get deposited into a bank account, it would earn 0.1% interest, and then you would go and spend it and it would be effectively gone. While in the IBC world, you're essentially earning, typically speaking, between a 3 and a 4% rate, at least as of today's interest rates. That's extremely tax advantaged, and you still get to use your money. And so it works out very, very, very well. Now, infinite banking is not complicated, um, but it's also not simple, if that makes sense. There's a lot of moving parts to it. And so, like I mentioned before, it is, in my opinion, incredibly important that if you are unfamiliar with the process of infinite banking, that you do go and contact a practitioner. And I'll do a specific video on this, on exactly how to find an infinite banking practitioner. However, um, the Infinite Banking website has a practitioner list, and you can find one in your area, both in Canada and in the US. And so you'll be able to connect with somebody there. So that's the first consideration is, A, do you really understand the infinite banking process? The second thing that you need to understand and consider when you are selecting a policy, and this is true of the actual policy itself, not the overarching strategy of infinite banking, is when do you plan on using the cash? And so some insurance companies don't allow you to access the cash for an entire year, like nothing at all. Some allow you to access cash immediately, but a reduced amount. So it really, really depends. And every insurance company is a little different in how they'll let you leverage it and what accessibility you have to the money inside of the policy. Now, this can be very, very important because the infinite banking process is oftentimes marketed towards real estate investors. And if you're looking to do flips and you have cash for those flips, and then you go dump a whole bunch of money into a policy, which based upon how whole life works, you're going to lose money your first few years while you build up the policy. You may need to have access to cash that you don't have access to. So that you need to consider. In my world, I needed or wanted rather access to the cash immediately. So I chose Equitable Bank. They allow you to access, roughly speaking, half of the money that you deposit into the as your premium plus your essentially your paid up additions, your EDO payments in the first month that you deposit the money, and then you slowly but surely get access to the majority of the funds by the end of the year, and then you just rinse and repeat that process. The third thing is, how much money do you plan on allocating towards your infinite banking policy? Now, this kind of goes in conjunction with number 2, but it's something that I think you need to think about, and everyone needs to think about when they're funding these policies. So essentially the way that this typically works, and I'm making up these numbers. I didn't pull out an extract like I normally do. You can see some of the real ones in my other videos. But let's say, for example, you want to deposit $10,000 a year. After the first year in cash value, you may end up having, say, $7,500. So you've immediately lost 25%. Well, if you were hoping to have $10,000 at the end of the first year, well, you need to ensure that you deposit more than $10,000. Okay. And yes, that costs more, but you may have benefit or need for it and want to fund it this way. A lot of people think that if they put $10,000 into an infinite banking policy or any whole life insurance policy, that they are going to come out and have $10,000, but that is not true. You will have a reduced amount. Most policies break even in year 4 or 5, and potentially up to about year 8 when properly structured. Can be a little longer depending. So that's kind of your break even point that you're looking at. So oftentimes there's this fine game that ends up getting played, which is, how much can I afford comfortably speaking, and how much cash value do I want access to? Now, the truth of it is I actually don't think you should worry so much about this. One of the biggest negatives of the infinite banking process is it is a long-term commitment, and you do have fixed premiums. Now, they are super flexible, and you can you don't have to always fund your policy with the max amount of funding because a portion of it is going to be your base premium, and then your extra portion is essentially going to be paid up additions, and in Equitable, that's known as your EDO deposits. But you're going to have a component, and let's just say this is like a 60-40 split. I'm making these numbers up again. I don't have them in front of me. But you can always cut this out to where you only have to pay, say $6,000. So it can be flexible that way. But it's just something that you should be aware of when you're choosing your policy. You will hear an extensive amount of talk in the infinite banking community about putting as much money as you can into this, because this is this fantastic bank system that stores your wealth. And I don't disagree with that you want to store as much wealth as you can, and you're able to. The problem that I have with this is that, let's say, for example, if you have a free cash flow of $20,000 per year, and that includes payments and money that would be allocated to any extra debt that you would incur. This is truly free cash. The challenge is if you go fund a $20,000 per year premium on this policy, and then you want to go ahead and, buy a car with your policy, and you got to pay yourself back and be a good banker. The question is where does this money come? You would have to reduce the amount that you put into the paid up additions, which would decrease the amount of money that you can effectively put in these policies. And it does impact the performance of the policy slightly, not large. I believe I've talked about it in another video. And if I haven't, I'm going to make another video on that shortly. But it's something to be aware of, something that you should note. It would be better if, for example, you had $20,000 that you said, okay, I'm going to put $15,000 into my infinite banking process, and then $5,000 is going to end up being, you can call it whatever you want. It is just not going to be allocated into the infinite banking process, because what you don't want to do is get to the point where you can't afford your premiums. Now in this example it wouldn't happen, but if you had to take a lower paying job, or you had a bad year in business or something, if you max out your free cash, then ultimately it's not going to work. So what happens in the infinite banking process is, let's say if you decide to do a $15,000 infinite banking policy, and then you're also saving on the side $5,000. Well, let's say 3 years. Well, let's say 5 years in. Let's say we are at break even. So we've got now roughly $75,000 in our infinite banking, and now you've saved what? You've got $25,000 in cash as well. So cash, IBC. One thing that you can end up doing is that, say, if you have a real estate project that you want to go and take advantage of, well, you can effectively say, okay, I'm going to take a policy loan of $50,000, and rather continuing to save money in cash, because this might be used for closing costs, it could be used for anything really, you funnel this $5,000 into paying this off. Now, long story short, there's a million different ways to do this. The reality is that you just need to make sure that you can afford the policy up front. So when it comes to, what to consider when selecting a policy, as long as it's built and structured properly for infinite banking, and any practitioner will do that for you. It is not as complicating as all the webinars make it seem to be. It is just, however, not done by the traditional insurance agent. You're going to be fine. All of the considerations are external to your own personal situation and how you plan on managing your finances in the future. So I hope that makes sense. As always, like the video, please, and thank you. Leave a comment below. What do you think? What are your thoughts? Do you have any other questions? I have a really, really fun time recording these answers to these questions. So yeah, I look forward to interacting with you in the comments below. Have a great day.